Okay, welcome, ladies and gentlemen. FOMC minutes release. This is what you need to know. Now, firstly, I do want to apologize for yesterday's video where you heard a double audio, but that's exactly what's going on through my brain. And I was indecisive today as to whether I was going to do a video and repeat the same thing just to mess with you all. But mad love for the guys that managed to watch that. It was only a short little segment of me doing double audio, but you know, I hope you made sense of it. Anyway, let's park that. What's going on today? Firstly, welcome. How are you all? Come on. When was the last time someone asked you, how are you doing? Are you good? And genuinely meant it. That's what I'm asking you all. Be nice to know what you guys are saying. But we're going to know very shortly how we're all going to be feeling about risk once the FOMC minutes comes out. You see, usually when the FOMC minutes comes out, we kind of get a good feel for where we are with the Fed. But we've been having speakers non-stop coming out. And Barr yesterday, who is very important. Why is Barr so important? Well, as a Fed speaker, he's a dude that can vote this year. But he's on the fence as to whether he's going to be hawkish or dovish. And comments yesterday talking about goods inflation needs to be lowered to suggest rate cuts. All right, we know where you're leaning towards, Mr. Barr. Good old, anyways. Yeah, you're good. Yeah, I'm good. I'm all good. I'm as good as I can be, ladies and gentlemen. Anyways, let's get with the program and understand what we're dealing with today. Today, I would need you to take what I'm saying, okay? Not with just a pinch of salt, but just to open up your minds a little bit on what's actually going on. You see, there's this weighing game happening right now, and investors are trying to work out, should we go risk on or risk off? The AI market is booming. We've just had Meta announce that they're going to commit to millions of chips with Nvidia. Great news for the Mag 7. NASDAQ, why aren't you moving up? Yesterday's price action was treacherous. Madness across the board. Talks with Iran are starting to get all good, but tensions are still there. Trump's about to put a spanner in the works with this Taiwan weapons deal. Why would you do that, Trump? Why would you try and wind up the one nation that is the world's factory? China, China. How's that going to be seen in the marketplace? But it's all fundamental, whether you like to admit it or not. Bitcoin will not go up if the dollar is strong. Bitcoin will not go up if the rates on the dollar are higher. Bitcoin will not go up if the tech market is going to see that a corporate finance, once that gets refinanced, it's at higher rates. And that means the cost of business is still going to be high. It all stems from interest rates. Now, to better present it for you all, imagine you've got all these bankers sat at a table and all the major banks all come along and they say, yo, what's good? What are your rates today, sir? And they'll say, we're giving you 3.5, 3.75. Thank you very much. Let's go over to Bank of Australia. What are they saying? Well, we're going to keep it at 3.85%. What about the euro? Well, we're going to be sat at 2.15. What about the yen? Well, we might actually start to increase our interest rates later on, but we're currently sat at just less than 0.75%. Cool. How are we going to make some money? Well, let's just add a little bit on top of that because that's our base rate and then just distribute the capital. Yeah, but it's still a bit expensive though. Well, this is where we are right now because we at the Fed are indecisive about whether we should be cutting or not. Why? Because we got that sticky, we got that post-it note, that blue tack thing called inflation. Let's break it all down, ladies and gentlemen. Stocks rise, AI jitters ease. Okay, well, what's the story with AI jitters? Quite frankly, ladies and gentlemen, the AI market's got a problem. They're spending too much money and investors want to know if they're going to get a rate of return. How are you going to be spending all this money? That means you're investing in certain projects. That means you're borrowing money, whether we seeing it come through with convertible bonds or however they're doing it, okay? Fundamentally, the cost of business is still being deemed as high. What's the expectation of rate cuts, ladies and gentlemen? Well, let's just go and have a look at that bad boy, shall we? Fed Watch, no rate cuts in March. Happy days. April, where we at? 76.8%. No rate cut. Okay, going into June, possibly could get a little bit of a rate cut. But today, if the FOMC minutes does reveal any hawkish sentiment, ladies and gentlemen, all those guys down there that are looking up and they're like, I'm waiting for that short to just pay me out. Your market is going to snap drop. Okay? Are we starting to see the signs? Check this out. In front of you is the NASDAQ. Okay? A few days ago, remember when Trump said the Dow is at 50,000, it's going to go to 100,000. Why did the Dow do that, yet NASDAQ didn't? Why didn't the S&P do it? Why did the Dow make an all-time high and then drop? Why didn't NASDAQ do it? Why didn't the S&P do it? First things first. Geopolitical tensions cause what? They cause oil's price to go up. Transportation stocks, which is made up of a lot of companies inside of the S&P, are subject to changes in the price of oil. Why? Well, if the cost of oil is going up, that means those companies have to increase the cost of goods and services as a transportation company to get those products out to their clients. Why? Because they need vehicles, lorries, vans, you name it, to get all those products and services distributed, and they need oil to make those machines work. Well, if the cost of oil is going up, that's a little bit of a problem, which means that if oil's going up, that means everybody and their best mate and their dog are also going to have the problem of oil's price going up. Quickly going over into oil's price right now, you can see that we've got this issue. I mean, come on, $63 a barrel. It's not really good, but you can see it's just basing out. Why? Because we don't know where we are with geopolitical tensions or not. Is Iran going to come through with a compromise? And that's where we're leaning towards. Are we going to see this Taiwan deal going through? And Trump is still pending a decision. And I promise you, if that does happen, investors might think, oh, that's great for defense-based stocks. That's correct. But it's going to increase tensions, and they're going to be waiting for the sleeping dragon to open its mouth and say its opinion on it, given that China has been pretty decent with its intimidation. But now Trump stepped in and said, here you go, Taiwan, given that you do run the majority of the semiconductors and everything that we need is coming from you, we want to be your best friend. So you can appreciate why oil going up right now is the idea of investors pricing in the possibility of tensions mounting. But what about our dearly beloved gold? But Tino, we're talking about inflation. Let me get to it. Gold is starting to make a bit of a claim to the upside. Now, as I said to you all before, just mark my words, gold is getting ready to pull a wonderful move to the upside. Come back to this video and you will understand. They're getting ready to retest these highs, ladies and gentlemen. And the only way that that's going to happen is one of two things. Firstly, if they decide that they're going to cut the interest rates, investors will be like, happy days, no point in sitting in dollars anymore. Why? Because it's a zero yielding asset. So it's a yielding asset, sorry. And the yield on the dollar is going down. So where else am I going to go? Well, gold moves inversely to the interest rates. Interest rates down, yield on the dollar is down. Why sit in dollars? Let's go over to gold and start taking advantage of gold's price action. Equally, when the FOMC comes out and they suggest that we're not going to get interest rate cuts, gold's price will start to pull back. But geopolitical tensions, Iran, US, Taiwan, US. Don't forget Ukraine and Russia. There was a fire on a Russian drone. Something's kicking off. So we know that war is still a theme. And gold's price will continue to go up, but we need the catalyst. And in the meantime, whilst gold is trying to work out, waiting for that news on the catalyst, okay, they are preparing for the hedge. And I've said it 1,000 times. You go back to when gold was only $2,000 an ounce, $1,800 an ounce. I've said it then and I'll say it again. When gold's price goes down, it's not going down because people don't like gold anymore. It's because they're picking up gold on bid. That means they're buying it in preparation for the next event. Have you not noticed that when the NASDAQ goes up, gold goes down? Why? Because investors are like, well, why do I need to hedge myself? Gold is a positioning asset. It means that they're picking it up and putting it into their portfolios just in case there is an event, and that we can actually win on the back of that event because investors will rush to gold. So when gold's going sideways, Investors are like, oh, we're going to get a breakout of a channel. Fuck that. They're trying to work out the logic as to whether or not geopolitical tensions are going to continue. I'll go into gold. Are we going to get interest rate cuts? I'll go into gold. But if we're not going to get into interest rate cuts, okay, and then something magnificent happens with geopolitical tensions, well, I don't need to be hedging myself in gold. Interest rate story can just go to the side. I'll start taking on risk in the stock market because even though the cost of business is still a little bit high, it looks like they're absorbing it. Cool. So they remove themselves from gold, go into the stock market goes up, hedge investors start taking off risk in gold and then take advantage of the rallies to the upside with the NASDAQ. Equally, going over into the volatility index, you can see that when that starts to pull back, then of course the stock market goes up. Investors no longer need to hedge. Could be giving us a little bit of a clue as to what could be happening later on if the FOMC minutes comes out. Now, I've got a bit of a logic. What if we do get a hawkish sentiment today? Look, back to what I said about the Dow. The reason why the Dow made an all-time high is because investors are rotating out of tech stocks. Why? Because interest rates are still high. If the expectation that the interest rates are still going to be high for the next 2-3 months, then why am I going to be keeping my money in risk on assets that are subject to the changes in interest rates? And if the rates are going to be kept the same, then it means that cost of doing business is going to be higher for longer. So, back into it. NASDAQ hasn't been able to make an all-time high, and we've had some decent news. I mean, look, the Meta build-up story right here. It's going to be building an infrastructure with NVIDIA. When Meta not so long ago did say that they're not really keen on NVIDIA's product, now they're coming back into it. Why? What's going on there? Maybe it has something to do with the fact that NVIDIA says we're not going to focus on graphics cards anymore. We're going to start focusing on infrastructure. What is infrastructure, ladies and gentlemen? I've told you, and it's the next thing going. Data centers, data centers, data centers. Please, all of you, comment data centers because this is the next thing. I gave you quantum computing that blasted to the upside 1900% collectively as a sector. You guys made money on that call, okay? Don't worry about Circle, ladies and gentlemen. I'm sure you're aware of the partnerships that are coming into play with that bad boy. Long-term play. Don't buy it now if you want to see a 50,000x in 15 minutes. Don't entertain it. You're not built for the game if you're asking, what about Circle, Tino? You're not looking at the bigger picture of things. Please forgive my tone, but I'll try and put it across to you in such a passionate way so that you remember it. Because when you start making your coffee or you're out with your missus and she's like, what the hell's wrong with you? What are you thinking about? Is it that woman? No, you're thinking of Circle. Okay? You're thinking of value. You're thinking of the bigger picture of things. Going back into the logic. NASDAQ. Volume above average on the daily. Keeps on coming in. That red line at the bottom here. Okay? It's negative. They're offloading on tech. It's only event-based risk that leads the moves to the upside. We hear some great news about NVIDIA. Awesome. And they're declaring their earnings in about 7 days' time. So that's going to be another market mover, ladies and gentlemen. But what about today? FOMC minutes. Maybe the stock market is giving us the clue that they're expecting a hawkish tone. Well, if you are a platinum member, you will get this document every single day that breaks it all down. Now, in front of you is one segment of that document which explains to you the FOMC board members, the guys who are speaking. Today we have Bauman speaking at 6 o'clock. Who's Bauman? Well, Bauman is a little bit of an okay dude. He's somewhat dovish, and he's on the board, and he's voting this year. That means his vote is relevant. But Barr yesterday nipped it in the bud and said goods inflation needs to come down to suggest rate cuts. But who's Barr? Is Barr raising the bar? Maybe. But he is. Why? Because he's not on the bar. He's on the flipping bench. Look. In front of you, Barr right here is neither here nor there, and his position as a dove or a hawk. But he came into yesterday and said that goods inflation needs to come down to suggest the idea of rate cuts. Well, what does that say to you? Firstly, he's a voter, so that's all good. That means as a voter, he's influence. But he's neither here nor there as a dove or a hawk. But yesterday's comments make him a hawk, so now we're leaning towards a hawkish sentiment. The only person that's left is Kashkari. If he turns around and says, you know what, I think we should be waiting for inflation to come down to suggest cuts, that means an extra two people that have been on the bench that are both voters are effectively leaning towards a hawkish sentiment. What will that do for the marketplace? Well, listen, I think this is what's going to happen. In front of you, we've just had the news announcements that core durable goods orders is up 0.9% month on month. Congratulations, United States. You are in 37. Hold on a second. Let's just back it up. Debt clock. Let's have a look at that bad boy, US. Here we go. Just to put things into perspective, where's the US debt right now? Oh, wonderful. Going up, man. $38.7 trillion. Not 700 trillion, but $38 trillion. 702 million, 230, sorry, 702 billion, 239 million, 851,465, 360, whatever. Okay? You get the idea that the debt is still going up. Okay? Let's just go back a little bit. Don't forget. Let's have a look at this. Last week's data, a significant reduction in the inflation. Going into it, we saw CPI year on year came in at 2.4%. Wonderful. Inflation is down, which is why it makes sense that the NASDAQ, on the same day that we got the news announcements regarding inflation, they effectively made this wonderful move to the upside to only give it back. What does that tell you? Tells you investors still don't trust it. They're not confident. Buy the dips, sell the rallies is what is going on. Okay, buy the dips, sell the rallies, and then they bring it back. Vector candle recovery clockwork, ladies and gentlemen. Right? Core CPI comes in higher. Okay. Inflation year on year came in lower, but the core CPI came in higher with the projection of 0.2% last time that came in, okay? And it came in at 0.3%. So the cost of goods and services is going up. Core retail sales has gone up. The core CPI came in higher, yet inflation year on year came in lower. You had a storming non-farm payroll suggesting more people are going to be employed and more job offers are coming into play. Is it seasonal? Who knows? But the fact is, the data is suggesting that the ISM manufacturing index is showing that there is expansion happening. You know, 300 purchasing managers are all asked the question. How do you rate the level of business? Do you rate it good or, you know, the inventory or employment? What's your business relationships like? Where do you see the future? And those guys are like, you know what? We're all good, man. Happy days. And it gives us a lovely reading of 53.4 or 53.6, whatever it was. That is an expansion. So if you've got the manufacturing sector expanding, that means what? There is a demand. There is business. Everything is working. What does that lead them to? Well, that leads them to the possibility of increasing the cost of goods and services. We had the core PPI came in, and that came in at 0 spot. That came in at an increase, okay? And then you got the core CPI coming in at an increase. So what do you think the Fed FOMC minutes is going to be today? They've moved the bar, ladies and gentlemen. It's not inflation overall. We now want to focus on the cost of goods and services because those are going to be the triggers to increase it. Well, then you've got oil going up. So we already know that that factor has not yet been triggered in this information. This does not include oil's price going up on geopolitical tensions. Remember, we had the government shut down and they blacked it all out and they didn't let us have the data and we were getting a backtrack on data. What the flip's going on? What about Bitcoin? Well, of course, you're here for the Bitcoin. Well, yesterday we had a storming day on the setups. Wanted to see Bitcoin take a nosedive to the downside. Didn't quite make the 65 that I wanted, but we managed to grab some wonderful entries. It was not so much on Bitcoin, but we did see that we wanted to see Bitcoin make a move up from this range over here to go up to 68,638. But we effectively didn't quite get that, but we caught the move to the downside. If the guys exploited that, which I know a few of them did, then they would have made money on that bad boy. But I think the best play was Ethereum, because Ethereum yesterday, when we saw that move come into action, we said we wanted to see Ethereum make a move up. So what was our entry for Ethereum? Here we go. So entry was 1997. That was our entry point right there. And we saw a very minimal drawdown from up to 2,000. So a $3 drawdown. And then Ethereum just came down. Didn't quite go down the way I wanted it to go down. But we did see the volatility move to the downside. But I think and Solana was exactly the same thing. Didn't quite make the full recovery. Or did we make the full recovery? Yes, we did make the full recovery on Solana. We made the full recovery right there with the blue vector candle. Entry was... Wait there, entry was at 85.17, and we wanted to see it come in at 85, 86 was in and around that range right there, depending on when they took the trade, but 85.17 was the range, and we wanted to see it come down to the vector candle recovery of the blue zone right here, and effectively go down to the green vector candle region, and you can see that they're sort of working their way towards that zone right now, okay? That's the Platinum membership, and on top of that, you do get this trade effective regime every single morning with lots of information, and you can it gives you a structure on how to approach the marketplace, ladies and gentlemen. That's pinned to the chat, so go check that out, and it's in the description for anyone watching this later on. Now, what can we expect today? Okay, FOMC minutes. I've given you the whole story. Now, let's just dive into a little bit of the Bitcoin to understand where's it going up to. When's my all-time high coming in, man? Please, make it happen, bro. Call Steve and just say to him, move the marketplace. Put your logic, man. Where's the macros coming into play? Well, let's just break it down right here. First things first. Bitcoin, what are you doing, sir? Well, what do you think Bitcoin's doing? Back to basics. If the cost of doing business is still too high, what do you think investors are going to do? Huh? You're going to buy Bitcoin because Saylor brought more Bitcoin. He's not buying Bitcoin with his own cash. He's getting you guys to fund it. Understand that? He's borrowing money. Genius. Okay? And he's already planted the seed that if it goes to 8K, we're still all good. So basically, Michael Saylor's width in terms of how much he can absorb is 8K. But, we're at 67. So we got plenty of room to go. All right? Let's just dive into what's going on with the Bitcoin. Spot order book, ladies and gentlemen. What does this tell you? It challenges all conventional wisdom behind trading. You see, when you guys buy, you're buying because price is going up, and that's what you are told. Whereas when you understand the game to a degree, you'll understand that you can't buy if no one sells. And if anyone's like, yeah, but Tino, you got the market makers and all that shit. Well, listen, behind every single position that you place, an order is automatically placed against that. So if you trade on BTCC, for example, okay, this is where I trade, and I primarily trade swing positions on Bitcoin for this, okay? I like to take advantage of a few bigger moves on Bitcoin when I do trade it. You can trade NASDAQ and the S&P. You can trade, of course, the stocks as well, tokenized stocks, commodities, coins, Circle. You can trade the Japanese index. It's there. There you go. Japan 225. So that is very interesting. That is popped back up there for some reason. And you can obviously short the dear life out of MicroStrategy. But this is where I play hedges, where if I'm seeing Bitcoin moving in a certain direction, I will then run positions on Bitcoin. But if I see NASDAQ making movement, I can guarantee NASDAQ's going to be making some wonderful moves, and I can exploit that. And it just compensates if I'm in a drawdown on Bitcoin, and I can exploit that on NASDAQ. If I see the euro making a move, I can go and trade euro. But if you do decide to join it, you get a 15% deposit on your bonus. Sorry, you get a bonus deposit on joining via Traders Reality. It's only 15% for anyone that takes advantage of it. No one else can take 15%, only you guys, but that's in the description anyway, and you don't need KYC or VPN. And you got 500x leverage, which is quite small in my opinion, coming from a background of Forex when I used to trade with 5,000 to 1 and even 10,000 to 1 leverage. Man, turning $10 into like 15 grand is brilliant. Well, not so much 15 grand, but building it up kind of thing. But yeah, costing tuppence. If you're really smart with leverage, you'll truly understand what it means, okay? Leverage is understanding that you want to borrow the house's money to make money. That means you use little leverage, or should I say little margin, to take advantage of more leverage. See, the problem is with a lot of crypto guys is they use high leverage and they put more margin up because they love the prospect of making a lot of money. Wrong. Use the house's money. Preserve yours. Use small margin, high leverage. Don't use high margin, high leverage. You're asking to get smacked in the face. That's not me encouraging you to use leverage. That's me encouraging you to use it wisely. Because leverage is the main problem that we've got. Speaking of leverage, going over into it, let's have a look at where we are. Some people are going to get smacked in the face very shortly. This is before I updated it. Let's just have a look at it. Here we go. Now, we've got some interest around the 67 region. We've got high margin traders because they want that moonshot. Could get tried. There's more weight to the downside of longs in terms of liquidations than there is for shorts. Okay? Now, when you go into the higher time frames of Bitcoin, you then say to yourself, well, Tino, I'm not a swing day trader. I only like to buy Bitcoin on spot. I want to know when that's going to be the case. If there is a segment on the live stream that you are going to clip, you are going to follow, you are going to subscribe on, it's this part right here. Welcome to the 20-20-40 method. Are we in the room, ladies and gentlemen? Yeah? Okay, then. Check this out. In front of you is Bitcoin's price. This is the 20-20-20-40 method. It works on the following premise. You have $10,000, ladies and gentlemen, okay? And you are going to split that into 3 segments of working capital. That means 20%, 20%, 20%, okay? This is for your DCA, guys. This does help people because I've mentioned it before and people have made change off it, okay? Just go watch the live streams. It's all there. Now, 20-20-20, okay? What your goal is to make sure that this 20-20-20 is 20% of the capital, which means 2,000, 2,000, 2,000 if you've got $10,000. This is your working capital, all right? We're going to change that to yellow, okay? It's your working capital. Now, how do we apply it? Well, firstly, we need to understand what about the 40%, Tino? Because it equates to the total of $10,000. This is your resting capital, okay? This is for moments when you see the market shit the bed and you're like, oh my God, should we sell? It's where you go in and buy. It's when you look at the volatility index and you see that it's spiked up. You know that they are actively, aggressively hedging. That means there's going to be a reset on the hedge because they've achieved the hedge. That the implied 30-day volatility in the future of the S&P 500 is favoring lower prices, it spikes up. And when it spikes up, that's when you get ready to buy. When it's high, you buy. When it's low, you hold, but you can technically get ready to short on the premise of the hedging coming back into play. The idea is to pick your spots on the 20-20-20-40. It means this. Where are we at right now? Right now, we are waiting for interest rates. That means we're waiting for the easing policy to come into play. Right now, interest rates are high. So what are we waiting for? For them to get cut. FOMC minutes today will determine that path. If we do get the rate cut that they are saying to us, that means that Bitcoin's price could effectively find support inside of this range, okay? Let's give you the 2 scenarios of it not, okay? Look at this. In front of you, you've got Bitcoin taking a move to the downside. Okay, fine. Where's the next area of support? That would be in this area right here, which is the longest area that Bitcoin has consolidated from in its all-time high range and then expanded to the upside. We've just gone into the midpoint of that range. So we're now engaging in what would look like support. Hypothetically, this is where you would put your 20%, okay? Your first bout of working capital, okay? If the information comes out today and it's no good, Bitcoin will then drop and move down further. Cool, it moves down further. So what you have done is effectively placed a 20% order, hypothetically, here, okay? Then from that, you wait and you see Bitcoin goes down further. It then goes down to this range for, like, for example, 50,000, and you've placed another 20% right there. So 20% here and 20% right here, okay? You've still got another 20%, all right? Then what happens? We've got tensions overseas. It causes a bit of a problem. Bitcoin then continues to go lower, and then we end up sat at the 45,000. Oh my God, Bitcoin is on fire sale, right? You add another 20%, okay? When Bitcoin is hovering around this range, we then get another word on the street suggesting that interest rates are going to get cut. Okay, so I positioned myself on the back of bad news and said that I'm buying at this point, interest rates not getting cut, and then they're coming out with some geopolitical events. I've now scaled in my working capital. Now I've got to sit tight and wait. What you then start to notice is the easing policy comes into play. They are going to cut the interest rates and we're going to get 2 big rate cuts. Awesome. Bitcoin then starts to consolidate and it starts to make a little bit of a move to the upside. The first 20% is now in money. Now you're working on the next 20%, the working capital. Then all of a sudden, Donald Trump wakes up and says, I don't want to look orange anymore. I want to look green. And the market says, no, we don't like that. Okay, I will start doing some deals with other nations and piss everybody off. So what happens? Bitcoin then drops magnificently down to the 33,000. This is where the 40% comes into play. It is an event-based risk. That means the market would have positioned itself and then hedged itself in that moment. The volatility index shoots up. You look at the stock market, it's collapsed. Everything has now come at a discount. You then plant the 40% right here. Remember, you've already got the 20 up here, 20 up here, 20 up here. They're all in a drawdown. But you can see that the market has bottomed out. Everyone and their best friend and a whale has come in and bought Bitcoin inside of this range. You plant your 40%. Your 40% instantly makes a return and Bitcoin shoots all the way back up towards your next 20%, which was the second bout that you invested in, okay? So your last 20% is making money, your previous one is making money, and your 40% has made you a stack of cash. What do you do with that 40%? You sell it. Get out. Why? Because when you get rid of that 40%, ladies and gentlemen, what you are effectively doing is adding to the portfolio. So now your 40% previously has increased, which means you now have more buying power. Remove it from the marketplace. So Bitcoin's price has now made its move up and now we're consolidating. Then what happens? Bitcoin continues to go even higher. We're in an easing cycle. We got our rate cuts. Money is now cheaper. And then Bitcoin keeps on going up and it keeps going and going and going. And everybody and their best mate is actually loving life because you have made money on your first initial purchase, your second initial purchase, and your third initial purchase. Now you are being presented with a question. What do I do? Do I hold on to it? Remember, this is the working capital, the 2020. It's the working capital. So then you say to yourself, you know what? I'm going to actually take some money off the table, okay? So you then decide to close off the 120% down here. That 20% down there has now increased in value. That then means you're going to say, I'm going to keep this existing one right here, and I'm going to keep this one right here. I'm going to take some profits on this bad boy. Then what do you see happening? Bitcoin starts to pull back. Hold on a second. I still got my 40% from earlier on, which is higher in value because of the money that I made on it. On top of that, my 20% down here has closed off with profit. Guess what? I can now start buying Bitcoin in this range right here and add 20% up here. Awesome. Cool. But what am I doing? I'm adding 20%, which is more in value. Okay. So then what happens? Bitcoin then starts to continue to make a move to the upside. Now you're left with another question. What do I do? Well, the 20% first has made money. That one has made money. The one that I closed off before has made me money. I've added it to this and it's now making me money. Where am I in the macroeconomics? Geopolitical tensions have calmed down a little bit. Interest rates have been cut. The cost of doing business is cheaper. We've had wonderful news from Nvidia that they're going to be doing great with their earnings. Meta's doing great. Mag 7's doing wonderful. The stock market is great. The US debt is increasing by the trillions by the week. Happy days. Bitcoin shoots to the upside. In essence, what you're doing is if you're paying attention to the macros, Bitcoin in principle will keep going up. Okay? And this is where the true form of DCA comes in. When you align the macros together, you buy the dips and then you sell the rallies and you maneuver that 20%. Sell it up there, buy it back here. Sell it up here, buy it back here. Okay? Because every time you do that, the value of your 20% working capital is increasing and you're getting more purchasing power to buy less and be in the market for less time and earn more money. That's the story we've got right now with the dollar. We're trying to work out if the dollar is worth putting to work or not. If interest rates are going to get cut, it means we now start putting our dollars to work elsewhere in assets against the dollar. That means Bitcoin will appreciate off the back of it. if we're not in a full easing cycle where the money printer is not working, and of course they're not cutting interest rates, how do you expect Bitcoin to continue to go up if the narrative is that the yield on the dollar is still going to stay high? Does that make sense? I hope it does. If it makes sense, give me a hey ya, like, subscribe. Never mind. I'll drink to that. Oh, okay. That makes sense. Demo accounts just tell you whether to work on your psychology or technical analysis. Demo accounts don't tell you nothing. Sorry. I will stand up for that. Demo accounts are there for you to understand the mechanics of the marketplace, as in how to buy, how to sell, how to test a strategy, how to do this. True trading starts when you put real money down, because there's something that the demo account doesn't give you. Accountability. You ain't accountable for nothing on a demo account. You lose the demo account, you reload. Where's your accountability? If you lose on the demo account and you get angry with yourself, then maybe that's where the accountability comes in. But demo trading is only good to just effectively keep you in awareness of testing a strategy. That's it. You don't learn nothing when you don't put money down. You know, there are guys that will buy £500 shoes, but they lose $50 in the market and they're depressed. Doesn't make sense, does it? You need to work on that relationship, that idea of risk. And when you've got that down to a T, then you can come to the market and be like, okay, I know how much I'm going to make. I know how much I'm going to lose. So I've got nothing really to work. I don't know how much I'm going to make, but I know how much I'm going to lose. Okay, because I can't tell you if Bitcoin's going to go shoot up on the day just because we've got a nice TP. Doesn't mean nothing. I mean, yesterday's TP right here on Bitcoin, okay, would have been wonderful if it came all the way down to 65,000. But what it did, it only came down towards the 60, where was it yesterday? Yesterday's price action on Bitcoin. Let me just clear this. Here we are. So where did Bitcoin go yesterday? It dropped down only down towards full range was 66,616, okay? And we had an entry of 68,638, all right? And then it got to 66, okay? Okay, cool, right? Didn't get the full move, and I'm not ever going to claim I'm going to get the full move, okay? But we're in the right idea. Take what you can, but we know what we're going to lose, but we will never know how much we're going to make. And when you align that with your psychology, then you're setting yourself up for success in this game, because you're not focused on the end result. You're focused on the process of getting towards the end result. And if the end result is sooner rather than later, take what you can. Capish? What's the difference? Okay, here we go. We've got a nice little question here. Okay. What's so different with the macros from a few months back now is just usual dip start for the year, and we know what more Trump's doing for the markets to absorb. What's the difference? Let me explain. Okay, then. Let's put it into this perspective, ladies and gentlemen. All right, here we go. In front of you is the federal funds rate. I implore you to do this, okay? And those of you that do it, tag me on Instagram showing me what you've understood about it. Tag me in a story or something, all right? Traders Reality, that's my Instagram, okay? Tag me in anything, man, all right? You learn something or you want to know something, tag me in it. Macro operator, I know you. I know you're going to do something. You and your euro dollar story, don't worry. Anyways, what's the difference between then and now? Well, let's just look at it. You see those lovely vibes? Yeah. Yeah. That was in 2023. So let me explain. Before, when I came into the channel and started the channel and did it all, I never focused on macros. Why? Look at it. Why would you give a damn about the macros? Nothing was pushing anyone anywhere. Why? Your interest rates, we just come from an easing cycle. Look. We went top side, 2.5%. Then they said, we're going to pivot. Oh, there it is. The pivot story. Drop, 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 bang, 0.25%. Neutral. The cost of money was zilch. I didn't need to care about anyone saying anything. No FOMC speaker, no nothing, no non-farm payrolls. Good news was good news and bad news was bad news. Right now, you got good news is bad news and bad news is good news. That's dead, okay? But what you're seeing here is when the interest rates are low, it means cost of doing business is zilch, okay? It's when it starts to increase that we're going into a tightening cycle. That's when you need to start paying attention, okay? When they came in at 1% here and then they increased it to 1.75, then it went to 2.5, then 3.25, 4, 4.5, 4.7, and they went to that magnificent 5.5%. This is when you need to start paying attention. Why? Because there is the possibility that the ceiling had been hit. So that means we're going to go into a what? Easing cycle. Well, how aggressive is the easing cycle? Not so aggressive now, is it? 5, 4.7, 4.5, left it for absolutely ages, 4.25, 4, 3.75. Not really cutting now, are we? Hold on, the expectation is that they could actually keep it higher for longer. Okay, that means I need to be paying attention to the dollar. Let's go over to the dollar and have a look at what that bad boy is doing. Is the expectation that the rate on the dollar is going to be higher for longer? Well, hold on. Let's just back that up a second. Hold on. Do we need to pay attention to it? Yeah, 0.73% increase on the 2-year. Expectation on the 2-year yield in the future is it's going to be higher. Okay, what about the 10-year? Okay, well, 5-year, that's going up. Okay, what about the 10-year? That's going up. 30-year? Yeah, that's moving up. So if the expectation of interest rates is going to be higher on the 10 and the 2 and the 5-year yield, Bitcoin going up? Hold on. Hedge against inflation. That's correct. Bitcoin is the hedge against inflation. It's the hedge against inflation, right? Right. There's your hedge against inflation. Apologies, ladies and gentlemen, got the wrong chart. There's your hedge against inflation. When you align the story of macros, okay, before technical analysis, then you're aligning yourself with the masses of thought behind the perception of value. And what asset class can retain value? What asset class effectively helps me protect it in essence, similar to retain, but then there's a protection aspect to it to simplify, diversify. But perception of value is where your focus is. How many euros can I buy with my dollars? How many dollars can I buy with my euros? How many Bitcoins can I buy with my dollars? You ain't buying shit right now, but if the dollar is going up, then you might be able to buy a few more Bitcoin off the back of less dollars. Because if the dollar appreciates, which is what it looks like it's going to be doing, then you know that you are going to have to pay attention to dollar-heavy assets, USD CAD, USD JPY, USD Swiss, okay? And you short everything else until it starts to get cheaper again. I hope that makes sense. Is Palantir a tech or a defense company? In my opinion, it's a defense company. All day. You've got the intelligence to make defense equipment. It's a defense-based company. It's just too volatile. Okay? It's a very volatile asset class. We got some guys saying bullshit. Oh, God. Bullshit. We got a maxi. But it proved to me that the hedge against inflation is Bitcoin, not gold. This is gold's price, right? Bitcoin is digital gold. So logic says that Bitcoin should be doing the same thing. Whoa. Why? It's got fuck all to do with your on-chain. It's got nothing to do with the idea of Bitcoin. But the brutal truth is this. When we are all orgasmic about a 10, 15% move in Bitcoin in one day, and an investor comes to the board and is like, I'd like to diversify my portfolio and I'd like to add some assets. I'm hearing word of a cryptocurrency by the name of Bitcoin or Bytecoin? Bitcoin. Yes. Okay, cool. I'd like to add that to my portfolio. What does that trade like? How does it move? Well, sir, here it is. It's right in front of you. Here is what you have got with Bitcoin. It's been making significant moves up, significant moves down. It averages around 3 to 4% wild swings on average, roughly there or thereabouts, depending on where we are with the macros and, fiscal policies and what have you. But it's a good shout. Mr. Investor's like, ooh, I'm not too keen on that volatility. I mean, I'm happy to make at least 8% return on my portfolio at the end of the year, but I mean, this is just a little bit wild for me. I mean, I'd like something more conservative. Allow me to introduce to you the XRP, where it doesn't move at all. And that is your best definition of risk diversification, young sir. What I'm trying to say to you, ladies and gentlemen, is the idea of what Bitcoin could be hasn't yet been installed because it hasn't stood the test of time. It can't absorb these macro wild swings. Since when did Bitcoin give two damns about non-farm payrolls? Where in the white paper, in the code of Bitcoin, should non-farm payrolls be important for Bitcoin? Where should the FOMC be inside of Bitcoin's white paper in the trajectory of the future of money for the man? Shouldn't be relevant at all. The longer Bitcoin stands the test of time, the more bear markets it absorbs, the more changes in fiscal policy and how it adapts, the sooner the culture and the idea behind Bitcoin will then start to go into the idea of it being a asset that you do use to hedge against inflation. We're all fucked up on the idea of what we want Bitcoin to become, but it's becoming. That's what Bitcoin is. It's becoming, and we're in the becoming phases. And yes, it will go back to its all-time high for my hopium guys. It will. But we're in a transition right now. Cost of business is still too high, and we need to wait for that to go back